Hey everyone, this is Everything Accounting. I'm Alfred Ziglul, your friendly neighborhood CPA, and I'm going to talk to you about taxes today. And really, to emphasize, it's going to be tax refunds or owing taxes, because who wants to owe taxes, right? When you're going through your year, say you're an employee of a business, they're withdrawing taxes from you to pay CRA, right? So that's inclusive of your, first of all, this is Archie. He's my tax accountant, but he's definitely, more part of more part of accounting than anything. But yeah, so when it comes to your taxes, you're starting off the year, you just got a new job, awesome. You got your first paycheck, you see federal and provincial taxes being withdrawn, you have CPP and EI being withdrawn. Awesome. You're like, why am I paying so much in taxes? All this. Hopefully I get a big refund at the end of the year. What ends up happening at the end of the year is your business, like the business that you work for, is going to file your source deductions, which is your taxes, your CPP, and your EI. And then you get something called a T4. The T4 is a breakdown of how much you made in the year, how much you paid in CPP, how much you paid in EI, what union dues you paid, what other deductible expenses that you've been paid for, or deductible earnings you paid for, or anything of that nature, right? So all these items come into play. Your taxes as well is going to be on your T4. So you go to your local accountant, you go to me, and you're like, hey, I want you to file my taxes this year. I want $10,000 as a refund. Me as an accountant, I laugh and I'm like, I have zero control over that. So I'll do what I can, but here's kind of what you're looking at. So the way that it kind of works is you've paid throughout the year, say, $30,000 in taxes, right? It's a lot of money. You're like, I want money back. But when you file your taxes at the end of the year, the government then sees how much you've paid over the year. And if it's more than what you actually should owe, you're essentially going to be getting a refund. If it's the other way around and say you owe $30,000 in taxes, but you only deducted 25, then you're going to owe 5,000. So the structure and the way it works throughout the year, and the way that all payroll softwares work, all payroll accountants work, is that it's a generalization of you earn X amount in the year, this is how much you get paid, generally speaking. So everyone in that bracket should get taxed at the same level. Then at the end of the year, when you're filing your taxes, this is where we go from a generalization to your personal situation. So we could use me as an example and person A and B. So me, I don't have any kids, so I have no dependents, right? So without any kids, I will not get any tax benefits from having a dependent. Whereas person A might have one kid. Person B might have 3 kids. Now, I am married, so we have joint income at the end of the day in the household. Person A might be the sole earner of that family with that one child. Person B might be a single parent with 3 kids. So this is where at the year end, we're looking at the difference of what I do throughout my year, how I spend my money, how I live my life, and then how person A does and how person B does. And based on certain parameters, so you have like medical expenses, you have different insurance policies. Say I have a ton of student loans and I'm paying student loan interest on it. Say I have rental properties. Say person B has a side business that they're running as well. So like there's so many different factors, so many different parameters, and each person is very different. So given that, we look at the end of the year what our tax impact is, right? So when we evaluate at the end of the year, I may have paid $30,000 in taxes throughout my year. Person A would have paid the same amount. Person B would have paid the same amount. but my refund might have been actually me owing money of $1,000 because of the way that I live my life. Person A might get a refund of $2,000. Person B might get a refund of $5,000. It just all depends on your holistic view and your holistic spending. So we want to really understand why it is that we get a refund, why it is we get amounts owing. Now, refunds are not free money. And this is where a lot of people get lost in it. They're like, why am I not getting a refund? Or why did I get a refund this year and not last year? Or why is my friend getting like $15,000 in refunds, or whatever it is? A refund isn't actually the best case scenario. And I know it sounds very odd for me to say that, but the best case scenario is that you don't owe money or you don't get a refund. You come out net zero. And the reason for that is if you have money owing, then obviously you owe the government more money, right? Not the greatest, I get it, it's fine. If you get a refund, that means the government held your money for the year. So that also means that you have money outstanding to you that you didn't even know that you were owed, right? So you went a year without that money. Being at net zero means you paid the perfect amount of taxes for your situation, which means that you've maximized your money. So if I have excess cash, that $1,000, let's say that I was going to get in a refund, if I end up with net zero, then I should technically be able to have invested that $1,000 in anything and got a return on it. But the government, only to a certain degree, they give refunds of like with interest and things like that. So it's if you're filing super late and like all this stuff, there's a whole bunch of different factors. But at the end of the day, to guarantee that you're getting money back, you're going to get it at face value with the government, right? Getting it at face value is not to your benefit. So I know that most people want refunds. The reality is that if you can walk out of the end of the year not owing and not paying and not getting money back, then you've actually maximized. You've been beneficial in your taxes. So that's kind of how it works. Now, owing money with the government, with CRA, is something that you really need to consider because this has harmed a lot of people, and you want to make sure that you are actively looking at how much you owe the government and paying them on time. Because when you don't pay the government on time, they charge you prime rate, compounded daily. The government does not mess around with them being owed money. With personal taxes, you have April 30th is the file date. April 30th is the day that you have to pay. If you pay 1 day late, you will be charged interest on that amount. And they don't care if you process the payment on April 30th and it hits their bank account May 1st. They will charge you interest on that. So it's really important that you get your taxes done before the deadline. And it's really important that you pay your taxes before the pay deadline because they will charge you and compound it daily. I've seen this where people that owe money actually pay more in interest than what they owe because they just went a year without paying. So the government essentially will structure it that you pay compounded daily for 12 months, right? It is a lot. And there's also a 5% penalty on what you owe instantly if you're late. So you really need to evaluate how much you owe and really evaluate that you have to pay that money. So plan ahead. I always like to tell people and business owners that like, hey, whenever you get money, you need to set aside, say 10 to 20% of the money coming into your accounts for taxes, for future expenses, for anything. Just having that money set aside is important. Because if you owe and you're sitting there being like, I don't have the money to pay this, cool, but you're going to owe a ton of interest. So you just want to watch out for that, okay? But essentially, if you can work it out and you know exactly how much you're going to pay and it's pretty consistent for you, then try your best to have no refund, no amount owing, and you walk away at the end of the year net zero, like nothing's happened. Right? That's the best plan. That's the best way to go. Now, this is also a caveat for my accountants out there and my tax accountants. For those of you that think that we have control over your refund, we have control over how much you owe, we don't. We just do the job. And CPAs are actually, we are mandated to charge based on the work we're doing, not the refund that you're getting. Because if I say, hey, for every $1,000, I get 1% refund, if I were to do that, then it's in my incentive. I'm incentivized, and it's in my benefit to maximize your refund. And it causes the ability to do something wrong in your tax filings. So we are mandated to always basically charge what is a reasonable rate for our time. So we bill, if I'm gonna bill you, say $150, I'm billing you $150. It doesn't matter if your refund is $1,000 and this next person that's getting a refund of $50,000, doesn't matter, I'm charging them $150. It's flat across the board. It's the same no matter what, and it's dictated based on the completion of work, not based on how much you get back. So when your tax accountant sends you a bill after you owe money, pay your bill. Like, we did the work, right? It is not our fault that you have to pay more in tax. And I just wanted to throw it out there because I've had people come back to me and be like, wait, I have to pay tax and I have to pay you? That's not fair. I'm like, I'm not working for free. So, so you want to make sure that you understand that as a factor, right? But anyways, that is essentially, like, bare bones. That is how refunds work. That's how amounts owing work. It just depends on your situation and the generalization of how much you make in the year. Hopefully you learned something from this. Hopefully you benefited from this. And obviously, if you have any questions about your taxes, make sure you file on time, know your deadlines. But if you have any questions or you need someone to help you with your taxes, feel free to reach out. And hopefully you benefited from this video. So thanks for watching. And as always, this has been Everything Accountant. I'm Alfred, and wish you all the best.